ARK Invest just increased the price of Tesla new stock to $20,000. Were you aware of this? In order to learn why ARK Invest did this and to see the proof for this assertion, stay tuned and continue watching. Prior to making an investment, several investment firms thoroughly research the company's bonds and stocks. In order to make a wise choice, you should also think about the stock market and the economy. As a result, analysts and investors closely monitor Tesla stock's performance and fluctuations. Investors are still eager to purchase Tesla shares despite the stock's continuous volatility, as the company is expected to have even greater success going forwards. See why ARK Invest put a $20,000 price objective on Tesla shares in today's video. Experts, analysts, and investors all agree that Tesla investors will become filthy rich in the second quarter of 2022. This is predicated on what Tesla has achieved and developed thus far this year. You may be wondering, what are those? A 68% year-over-year rise brought Tesla's first quarter 2022 vehicle deliveries to 310,048. Revenue during the first quarter of 2022 increased 81% year-over-year to $18.1 billion, while Tesla reported a record quarterly net income of $3.3 billion, which above Wall Street expectations. Indeed, U.S. News reports that TSLA experienced a then 700% increase in 2022. With a market valuation of over $800 billion, Tesla went public in 2010 by issuing 13.3 million shares for $17 a share. After Apple, Tesla is the most valuable car maker in the world. The fact that the company's market cap is above $800 billion, while reporting $31.5 billion in total revenue for 2020, is more than enough to keep investors coming back. With its meteoric rise to the position of biggest automaker in the world, Tesla has declared its dominance in the market and seems determined to keep it. ARK Invest, or ARK Investment Management, LLC, is a St. Petersburg, Florida-based American investment management firm that oversees multiple exchange-traded funds. ARK Invest provides investment alternatives to those looking for long-term success in the public market with a sole focus on disruptive ideas. The firm managed $50 billion in assets as of February 2021. American investor Cathie Wood, who has been dubbed the most undervalued investor in the game, is both the founder and manager of ARK Invest. Wood is known for her remarkably perceptive investment ideas and the evidence that supports them. However, you should investigate the reasons behind ARK Invest's revised Tesla valuation model, which now projects a stock price of $4,600 in 2026 and a potential increase to almost $20,000 by 2030. An anticipated share value of $4,600 in 2026 is generated by ARK's revised open-source Tesla model. Around $5,800 and $2,900 per share in the bull and bear scenarios, according to the 75th and 25th percentile Monte Carlo results, respectively. Is ARK Invest of the same opinion as you? Please share your thoughts with us by posting a comment below. For 2026, ARK Invest predicts that 60% of value and over 50% of EBITDA, profits before interest, taxes, depreciation, and amortization, will come from Tesla's projected robotaxi business line. In 2026, electric vehicles are projected to account for 57% of the company's income in the simulation set, although with much lower margins compared to the robotaxi revenue in 2021. Tesla model that is open source. They projected that by 2025, each share will be worth $3,000. Nevertheless, they revised their position in light of significant developments, such as revised assumptions and inputs about autonomous ride-hail, revised estimates for capital efficiency, and a one-year advance to 2026 in the prediction. The most recent model from ARK Invest displays revised predictions for the overall autonomous ride-hailing business at different pricing points, as well as the likelihood that Tesla will achieve complete autonomy. They anticipate greater demand for autonomous ride-hails at higher price points than initially predicted, based on their examination of consumers' perceived value of time. In Western markets, travelers regard their work-related miles at around the same as their hourly income, and they value their non-work-related miles at about half of their hourly wage, according to research. According to ARC's calculations, the total addressable market for autonomous ride-hailing is around 11 to 12 trillion, with a long tail of demand in low-income nations. The price per mile is $0.50, which is in line with what ARC forecasts. ARC has revised the way the robotaxi business is incorporated into the model due to their heightened belief in Tesla's capacity to accomplish complete self-driving. Despite their earlier predictions that Tesla will never be able to provide autonomous ride-hailing, they are now assuming a launch in 2026 due to recent positive breakthroughs from Tesla. Along with suggesting that Tesla will commercialize autonomous ride-hailing in 2024, they also indicate that this will happen 4 years later than Musk had anticipated. Nevertheless, if robotaxis does not become commercially available within the anticipated window, then 9% of the time Tesla's model cases fail to materialize. The year of debut has a significant impact on Tesla's projected financial outcomes. The capital efficiency of Tesla is enhanced by ARK Invest's revised model as well. Compared to last year's model, Tesla's capital expenditure increase unit of capacity was roughly $7,700, a significant improvement from $84,000 in 2017 when the Model 3 was ramped up. According to their projections, Tesla will spend between $6,000 and $8,000 on each additional capacity unit in 2025. In 2026, Tesla is likely to spend between $2,000 and $7,000 per additional unit of capacity, thanks to its better-than-expected capital efficiency. These upgrades show that Tesla's margins could go up, but the most significant thing is that the company's expansion is no longer constrained by a lack of finance. Tesla, on the other hand, ought to have limitless room to expand within the bounds set by its management, bandwidth, and supply. To account for these limitations, the model uses the maximum yearly production increase to arbitrarily cap Tesla's production growth in any 1 year. Information input. The success or failure of Tesla's company is heavily dependent on its scalability. The expected value is the average of all 1 million simulations by 2026, assuming Tesla successfully launches robotaxis. These models are quite year-dependent. Within the majority of ARK Invest's lowest price per share scenarios, Tesla eventually debuted robotaxis. In certain cases, Tesla introduces a human-driven ride-hailing service that is vertically integrated, but in others, the company decides against launching a robotaxi network. Although there has been no official announcement regarding the launch of the human-driven ride-hail ARK, the firm has already discussed the strategic and tactical benefits of doing so. If Tesla were to introduce a human-driven ride-hailing service and simultaneously find a solution for fully automated driving, it might become a lucrative recurring revenue stream before the debut of its fully driverless service. ARK is operating under the assumption that its ride-hail cars, currently operated by humans, would eventually join the network of autonomous vehicles. It will fail if it doesn't introduce a robotaxi service in the next 5 years. While working on a solution for complete autonomy, Tesla might yet introduce a ride-hailing car that is driven by a human. In contrast, according to ARK's several scenarios with greater share prices, Tesla will write an article and deploy a robotaxi network within the next 2 to 3 years. According to ARK Invest, their Tesla model is conservative from a methodological standpoint, but they are still in line with their forecasts for 2026. By 2026, we expect Tesla stock to be trading more like that of a mature business than a fast growth one. When compared to Tesla's projected growth in 2026, the terminal multiple utilized by ARK's model is expected to be as well. A conservative approach to modeling at ARK. To that end, the year of the price target has a significant impact on share price expectations. By extending the current model assumptions to 2027, we could get a significantly higher price goal and compound annual rate of return. This impact will be there even if they keep using the same model until 2030, but they haven't fine-tuned the model for that time frame, so mistakes could still happen by 2030. For instance, there may be unmodeled business potential and substantial changes to vehicle form factors compared to the current model. One area where AI as a service might have a bigger impact on Tesla's bottom line is in customer acquisition. In 2026, ARK expects Tesla shares to be worth $4,600. In 2026, according to the bear and bull scenarios, Tesla shares may be valued around $2,900 and $5,800, respectively, thanks to the revisions made to their model. Keep in mind that the market and stock prices are sensitive to economic conditions, so these forecasts and assumptions could be wrong. The fact that these forecasts came from a reputable investment management organization gives them some credence, nevertheless. These figures and facts from ARK Invest have, of course, been derived from their meticulous analysis of Tesla, its stock price fluctuations, and its most recent inventions. Be sure to check out our other videos on the channel if you're interested in learning more about Tesla stock.